All right, guys. Jamie Saettele here. Apologize if my voice sounds just terrible, but uh, I feel fine, so no need to worry about me keeling over here or anything like that. But I wanted to start by going over a few, I guess what I'd call them, kind of just like the macro environment, right? Macro charts. What I mean by that is, I guess you can call them the big markets, right? The S&P, the bond market, gold, um, and the dollar in general. So, a lot of times when people talk about intermarket analysis, right, this is what they're referring to. They're referring to, maybe having an opinion on maybe the equity market or using other patterns in other markets or other, what they think might happen, say in the S&P or the bonds or gold to trade something like the yen, which, typically has a pretty good relationship, with these other markets. Now things have been really out of whack so far this year. I don't think that'll last forever. I don't think it's, so like a so-called regime shift, right? Especially when we have all three of these things seemingly lining up, in a very similar manner. So let me talk about that for a second. The most important one, actually, I think, is probably the bond market. The bond market has been known to be called, it's kind of smarter, right? The stock market is by far the dumbest market out there, and I mean that in all sincerity. It's always the last to know, right? If you look at even classic, texts of of technical analysis and intermarket relationships, stocks always do turn last. Typically, it's actually commodities that turn first, and then you have the bond market turn, and then you have the stock market turn. If you think about why this may be, it actually makes quite a good deal of common sense. Commodities are the real economy, right? Those are how much things really cost, okay? And so as they get more expensive, supply comes in, right? Demand comes off, those turn over, right? As those commodities turn over, you'll tend to get, interest rates, hiking, okay? Because that means as commodities have been high, economy's usually been doing pretty well, and you'll have interest rates start hiking after that, which means bond markets turn lower, okay? But once interest rates, kick up and start going higher, it typically is going to hurt corporate earnings. Corporate earnings then are going to suffer because of higher interest, and the stock market will turn down. Now, we've obviously had the first couple of these things happen already. In general, you've had, the commodity markets rolled over, and, years ago, 2011, for a while the bond markets had rolled over here back in 2012. But I mean, we are in just such an insane environment. Okay, and this really is, what I'm going over really is more big picture than we need to get. But anyway, it's good to, have a grasp of the stuff and economics and whatnot. From a trading perspective, what we're doing, making money in the markets, probably not that useful. All right, so the bond market, again, big sell-off, right? We actually wiped out the entire year's gains, traded down into the year open, as well as this really beautiful support slope, right? And I started posting this chart, I think, last week, and we've obviously rallied fairly significantly off the support, okay? So that is one thing. That's one little piece of the puzzle. Bonds coming into really big support, that's one piece of the puzzle that you would actually kind of chalk up to a risk-off environment, right? Bonds going higher, okay? All right, so we got that. Two, we all know that the stock market is at the, the all-time highs that it is at. And I'm not, going to say that, doom and gloom, the thing's going to crash tomorrow by any means. What I am saying is that we're getting into resistance that would be quite foolish not to pay attention to, from this extremely well-defined, again, slope, okay? This is the August low, this is the September high, this is the October low. That's a pitchfork drawn off those three pivots, okay? You can see the, the upper boundary, okay, over the last several months throughout November, December, actually was above the upper parallel for the pitchfork, but if you draw a sliding parallel from that, okay, it does cross through, basically every single high day up here fairly precisely, right? There's not a whole lot of follow through on the upside. It's not like the market ends up way up here. I mean, they never even closed above it. So it's a very precise resistance, okay? Obviously, we have a couple of very good touch points here on the downside on the median line itself, including the low in February, which was first trading day of February, which is the exact same thing that happened last year. So here we are getting right back to this level again. Okay, again, we just talked about the bond market turning up, indicating somewhat of a risk-off scenario, if you will. Well, it doesn't have to be risk-off, right? But it would, if the stock market turns down, you'd probably see the bond market accelerate to the upside. So the fact that the equity market's coming into the resistance that it is, and the bond market's already turned up, I think is a pretty big combination, something that I wouldn't want to completely ignore. So we've got that to look at. And this is about 2120 over the next few days. I mean, the line's not that steep, so it's not like we're talking about this thing increases 1 or 2 handles a day. It really increases like a quarter point a day. So the implications from this, and judging on how the market's traded at this line in the past, the sell-offs have been pretty, quick. I mean, in this case, we did spend like 3 days around it, spent some days around it up here, but, in general, the thing sells off pretty sharply. So I trade S&P futures. I'm looking personally to trade the short side out of this up here, take some shorts off of this and, trade it up around here and then hopefully be able to hold on to some for a big ride down. I think the first support probably comes in around this median line, which really could be above 2,000. But eventually, look, the lower parallel could come into play, and that could be all the way down near freaking 1,900 for all I know. Okay, and judging by seasonal patterns in the stock market, you've got basically after next week, I'd say the next 1 to 2 weeks tend to be seasonally somewhat weak. So we're talking about the potential for a move of 2,100 to 1,900, 200 handles on the downside. It's like nearly a 10% correction over the course of 2 weeks, which sounds insane to say right now, but I think it's a real possibility. So, so to review, S&P coming into huge resistance. Okay, look, we don't know what's going to happen. Okay, that's not the point of trading. My job as a trader and my job for you guys, okay, is, to point out opportunities, reward the risk, and try to get you in opportunities that when I'm doing my job right, make sure that, we can make 7.5%, maybe to 10% on a trade, and that's obviously an FX using leverage, because if I'm, going for, 150 to 200 pip profit, okay, with 5 times leverage, which I typically trade 5 times leverage, that's 7.5 to 10% on the upside. Okay, where if I have 50 pips of risk on each trade on average, when I'm losing, that's 2.5% loss. So that's kind of the job, right? Is, in my opinion, is to point out opportunities that are going to be 7.5, 10% on the upside and 5% or 2.5% on the downside when they don't work. Okay, and obviously you want to try to get a good entry too, so that if you do end up being wrong, that you can go break even and you're not getting screwed. So that speaks to a larger point. But getting into the combination of macro stuff here, right? We've got S&P resistance, I'm estimating up around 2120, okay? I'll bring in even a larger chart, a weekly chart. Here's a weekly chart of the S&P. This thing goes way back. This goes back to, oops, that's what I meant to do. Automatic. All right, so this thing goes back to the 2009 low. We're using the 2009 low. We're using the 2011 high, and then the 2011 low in August. Okay, is the 3 pivots here, and this is a beautifully defined fork. Okay, you've got the median line cutting through a good deal of price action. You've got lows getting registered. Even the October low that we just had came right on this line, which if you look at the archive tweets, I believe I actually posted this back then too. Finally, we've got the sliding parallel right here, which crosses basically every high, every important high throughout 2014, okay? And that level is a little higher than where the daily one is, right? The daily one's at 2120. This one this week is at, this one this week is at like 2133. Call it more like me, 2132 and a half, something like that. Next week it's like 2138. Okay, whatever. It's obviously a big difference when we're talking about the daily chart in 2120, and then we're talking about the weekly chart and you know, the big resistance up there being, you know, it's at least as high as the possible ceiling goes, I think, would be 2135, call it, whatever, right? We're talking 15 S&P handles. That's, for a trader, that's a lot. It's a big move. But just want to point that out. So we have this huge overhead resistance, daily and weekly. S&P is ripping off support. You know, we could back and fill here for a little bit on the S&Ps and bounce back down here into support, whatever. But those two things point to a potential risk-off scenario in the making, okay? Third, and not to be outdone, of course, is the gold market. And the gold market here, somewhat similar, right? Often moves with bonds, has not really recently, but if this relationship is going to get back into sync, it might happen in this manner. We traded off of support here, 1190, traded up into resistance this morning. I was actually looking for a little higher resistance, 1216, maybe to sell futures, but didn't get it. Next big support, I think, comes around the 1175 area, and that's potentially next week. Okay, so all of these things, all three of these markets point to a possible a possible shift in the broader, you know, risk assets, right? And having more of a risk-off scenario come forth. Okay, and by that I'm not necessarily talking about the dollar. Dollar's not moving risk on, risk off. I'm talking about gold going higher, again, from probably closer to 1175, $25 more lower. Bonds going higher. I think we already made a low in bonds, but we could back and fill here for a little bit. S&P's 2120, 2135 max to look for a short and 200 points of downside within a 1 to 2 weeks. Okay, so if that stuff happens, well, it's interesting because we're setting up, it seems as well, dollar yen, right? If all those things happen, the bond market, which I think is the leader and I think is the tell here, and that the bond market's kind of doing its own thing, ripping off support. The bond market's the first to know. It's smart. Okay, that tells me that there is real potential for the dollar yen to absolutely, collapse, basically. Okay, and maybe that doesn't happen, whatever. But I think it's a good trade. It's a good idea, especially in light of the fact that we came into this week looking for resistance between 1960 and 1990, and we had a heck of a response yesterday. up at 1980. The high was at 1980. Okay, so we're still looking to short dollar yen like 1940 area. You know, so the next few days, let's put this 1940 up here. So the former high up here, you can see that thing, 1940. Okay, so if we can, you know, sneak up into here the next few days and things could even stay as quiet as they are, tough to believe, but if they do, we might be sitting up here 1940 just as the S&P is topping out 2120 or something, and then we have the opportunity to take them both to the downside, okay? And we'll let the market figure out what it wants to do on the downside from there, but there's obviously going to be plenty of support to contend with, including 1750, which is the daily reversal level, okay? You can see here, daily reversal support right here. That's the close from 116, okay? There's also daily reversal support here at 116.40, okay? So you have two levels to really focus on, 116.40, 117.50 as supports, 119.40 area probably, at least that's what I'm thinking, as resistance, and looking to short against the high we saw yesterday at 119.85. All right, so that's my big macro assessment right now. You know, a lot of times when I go through get these big grand ideas, they just don't work. But I like the reward to risk a lot up here for the S&Ps on the downside, and you know, saying until I'm blue in the face, but bonds seem to be leading. Dollar yen, by the way, I think it's somewhat of a tell here too. Look, dollar yen made its high in December, right? Dollar yen's not ripping off to new highs right now. We're not trading up at 125. Okay, we've actually been contracting, going sideways for a while. You have everyone and their mom assume that, you know, the sideways trade and the dollar yen gives way to a triangle and higher prices, and maybe it does, but don't even consider the alternative. That's silly. So consider the alternative, and the alternative up here presents us with an opportunity to trade to the downside. Okay, and if we start to get signs of washing out down here and basing, then great. But focus here is stalking this thing from the short side, just as, you know, we were doing up here back in early January. Heck, yesterday I wanted to short. I was shorting up here on my own. I just, you know, got out quickly, and I didn't have time to even, I mean, it happened so fast, I didn't have time to tell people, but whatever. This is the chart that was presented over the weekend. All right, so that's the macro stuff. We'll go through, obviously, all the majors, run down majors and some levels and stuff to pay attention to over the next few days. What I also want to do, though, is take a look at pound CAD, you know, and I always say that I never like to really look at some of these crazy crosses because kind of screws with me, but pound CAD is such an interesting juncture that we've got to take a look at it. So this is a weekly chart, and this is one heck of a long-term fork. Okay, we're talking, this thing goes back to 2010 lows, what was that, August 2010 high, and then down into March 2013. Okay, well, look where we were this week, and yeah, it's Wednesday, so we'll see how this thing closes, but look at how this, we popped above this thing on, like, it looks like total exhaustion. Popped above pound CAD and has, you know, basically settling back under, you know, the upper parallel. We don't even need that anymore. Settling right now under the upper parallel. So, you know, look, there are several things that tend to happen in upper parallels like this. One is that you'll get, you know, a consolidation up here, okay? But two is that you'll get a sharp reversal to the downside. So, you know, both of them, if you play it right, if you trade it right, then you actually have the opportunity to catch some downside regardless. Okay, look at the daily chart, and this is obviously a much shorter term fork. This one actually just goes back to November. But you can see we didn't have much action around the median line, whatever, but the slope does seem to be a good one, an actionable one, as we had, you can see these highs right? Resistance more or less playing around up here on the upper parallel. Yesterday we had a big reversal. Okay, we had a J spike yesterday, right? So that's, another little piece of the story here for pound CAD. Now I'll go to the hourly chart. Hourly chart, this is something to watch. For one, I'll highlight that we have a very clean 5-wave decline, right? 1, 2, 3, 4, 5. Okay. We just dropped here into median line support. We just dropped down here into median line support. So we're bouncing off of it. This is something to watch in the coming days, okay, for pound CAD. From here you have to look higher. In fact, the trade setup, there would be a trade setup here actually. You could look to buy pound CAD hourly reversal support. Hourly, like right here, okay, at 92.58 with a stop at 92, say 15, whatever, just under the low, and you could look to take that up for a retracement. To target the 50 or 61.8, whatever, 93.85 to 94.25. Bottom line is you're at support, so you do have to look higher as long as it's above this level, as per how to trade, basically with median lines. But keep your eyes peeled for how this thing plays out, the rally, because if it does play out in a manner that's corrective, okay, then you will have potentially an opportunity to have a nice short position for a much larger decline. I mean, we're to talk about potentially coming back into this median line at first, and that would be probably closer to 90, 50, 91, depending on when it's reached. So just wanted to put that forth with the pound CAD. Pound Aussie, something we were kind of tracking earlier in the week, and it just started kind of going nuts and haywire and whatever. I didn't really pay attention much to it the last day. But in general, the basic premise of this thing still being at resistance, I guess it's still, it's still kind of the case. I mean, support, month open support, 94.50, basically would come into play on the median line, tomorrow and Friday. So the rest of the week is where you get support 94.50. We're currently trading 96. Again, apologies for the way I sound right now, but I can't really help it. You might want to look at pound Aussie resistance on this line here. Again, I'm very unlikely to put anything like this on a swing trade. It's because the levels are so wide. It's very tough for me to manage the risk that way for pound, for these things. So I do want to give you a broader, picture of some of these, more volatile crosses. Okay. Also, when we look at these, pound crosses, pound CAD, pound Aussie, and do seem to be, again, right, topping out a little bit. Okay, at least at resistance, long-term resistance. Okay, so the fact that you're at long-term resistance doesn't mean that you have to go lower. It's a precursor to it. Okay, but it's interesting because we've got the pound dollar, right? Pound dollar. Look, we've been stopped out. We've tried to get short on this thing twice. We've lost 100 pips on it. So on those two shorts, 50 each, I guess, on each time. Doesn't mean that it means that we could be building a larger top. Okay. I mean, at what point am I going to give up on trying to short pound dollar? I can't really tell you that. I can. I would tell you it would give up completely if this thing actually blasted through this median line. Because if it blasts through that, then you're no longer in a longer-term bearish position. So, you know, we're getting into the point. We've already reached this level, which is highlighted as nice resistance. Got an upper parallel here. We've got the year open just above at 55.54. Got this upper parallel slightly higher at 55.80 tomorrow and 55.90 on Friday. So we're trading 55.10 right now. You know, within the confines of this thing, of this fork, which is pretty well defined, right? It's pretty good slope. I mean, we were trading it off the long side down here, ended up getting out right here. Thought it was real smart, but it continued higher. So, you know, between here and 55.90, you know, I can't do any better than that right now. As far as when the short position comes in, it's either going to be, the best I can say right now is it's either going to be on a total rip higher into 55.90, and then we'll try to, you know, maybe trade that high, maybe get a Friday high, you never know. Or, and the other scenario is you have to wait until it breaks down and rolls over and establishes some resistance, okay? So, you know, you can have an idea, like I have this grand idea for the pound or whatever based on a whole bunch of stuff, but it doesn't mean that it has to work. It doesn't matter how much information you've got backing you up. Okay, the market's going to do what the market's going to do. The market is never wrong. Always remember that. So I had a question last night actually on Twitter. Someone asked, would you take out your stop at 55.80 or what was it? No, 54.80 because of Carney or something like that? That is a absolutely not, never, ever would I do something like that. One, my entries, exits, targets, whatever, are based on setups in price, okay, which is based on studying and analyzing price using these methods. It has nothing to do, I will never make a trade based on what I think of some central banker or whatever, okay? That just will never happen. So the answer to that's absolutely not. And, you know, it just puts you in a bad state of mind. If you're sitting there in a losing position like this, you know, that's why I like to be out of the loss really fast. If this was a crappy trade because it took like 3-4 days for it to or 3 days for it to finally take me out. I'd rather be out within like 2 hours of a losing trade, right? I want to know if I'm going to be right away. Then I can go back to the drawing board. With this one, it came off originally, seemed like things might actually work out. Traded down to 154 yesterday, and then, you know, here we are, new high. So whatever. We'll revisit it when it's worth revisiting, and that could be at 55.90, or it could be down here at 53.50. You know, after we break some support. I don't know when it will be, but it's not at this second. Okay, this is a great level for us to be making a top. I'll say that, but putting a stop is quite difficult. Pound dollar loves to take out pretty much everything. So if it takes out, you know, the level it took out here, 154.75, what's to say it's not going to try to tag the year open at 55.54 or the upper parallel at 55.90? We'll see. I have a question from Petru who's asking, when you scalp, do you only use levels and slopes or additional tools like triggers and opening ranges? So a lot of times, Petru, what I do is a lot of the entries that I provide you guys, or the charts that I'll put up on the, like for example, let's see. computer's a little slow right here, right now at least. All right, so I'll give you some examples. So with actually, I don't think there's going to be any good examples from yesterday's. The last 2 days have been a little lean. But the charts that I give you guys, right, on these reports, I've always got, 6 to 8 charts or so that I'm following, and a lot of times I'll highlight levels, right? So I'll make them bold. I'll make bold levels, and I keep the charts right here. So when I'm looking to scalp a level, I have these charts in front of me. Okay, so I've already done all my work by the time I'm ready to trade. I already know where there's resistance, or where I think there's resistance, where I think there's support, and I'll trade into that level. So, obviously you have to have an active market to trade short term. The market's pretty much dead during the U.S. session right now. It's just there's nothing happening. But, to give you an example, no, I don't have like indicators or anything like that. Yes, I do have the indicator I do have is that with the levels here, opening week, I know where the opening price for the week was. I know where the opening price for the month was. I know where the opening price for the year was. I know that there's Aussie resistance, for example, up at these upper parallels from basically here up to 79.15 or 79.20. I think I wrote that this morning. I set out a thing. I said it's not an official trade, but, I'm looking. I like Aussie lower here. I just do, right? But the market's so quiet, it's kind of hard to put the trade on. So what I mean is it just doesn't go anywhere, right? You sit in a trade, doesn't move. It's annoying. So the way I'll do it is I'll just have these levels up. If the market starts trading into one, level, I'll put a short on here, and I'll literally put a 10 or 15 pip stop. I mean, that's it. The less things to think about, the better. So when you're ready to trade, where you're sitting down to trade short term, you have your charts, everything already done. You already know your work's done. You already know where it is that you want to trade, right? You're not sitting there analyzing the market intraday. It's not a good idea, at least not for me. You want to have everything done so that you know exactly where it is that you want to trade. And then when the market hits that price, if it's hitting it in a manner that's consistent with slowing momentum or whatever, it just feels right, okay? Then you put it on and, think about less things. So, the position size you're going to trade. If you're trading on 5-to-1 leverage or whatever you're trading on, okay? Know what your stop's going to be. Just put it on and put your stop in and boom, right? The good thing with these is, especially in an active market, is if your slope analysis is right, then the market should trade off of it very quickly, okay? Like here's an example of dollar yen. This is the one I put out this morning. It's a 15-minute chart. I mean, there's not a whole lot going on here, but you don't need a whole lot. So, look, we know that we want to be short the dollar yen, right? We have this grand idea about the dollar yen, S&P topping and everything else. It doesn't mean that the dollar yen can't go higher. So I've been sitting here looking at dollar yen all morning and waiting for it to get down to this thing, this lower parallel. And, maybe it was going to be 1875 because we had a low there yesterday afternoon at 1:45 p.m. So I'm like, if dollar yen comes into, after the U.S. Open comes into 118.75, I'm sitting there ready to buy it. I got my hand on the trigger, ready to buy 118.75 with a stop at, 118.60. So 15 pip stop, and I'm going to see if I can take this thing, up to 119.20 or even to 119.40, okay, because that's where the resistance is, wherever it is on the upper parallel, okay. You can see this is a pretty good short-term structure to trade. And if you can 15 pip stop, 10-to-1 leverage, so, 1.5. Well, on yen, that wouldn't even be 1.5% risk, right? It's like a 1% risk on a trade, and you're talking about getting 118.75, even getting up to 119.20. At that point, is going to be a 5% gain almost on the 10-to-1. So I said this last week. Leverage is not a bad thing. If you misuse leverage, it's a terrible thing, right? But using leverage in FX, if you know what you're doing, and keeping your risk tight and being disciplined about it, can be a great thing. I didn't take a trade here because the market never got there. I mean, it got down to, it's how disciplined you got to be. It got down to 118.80 on 10:45 this morning, right? It got down to 118.80. I was looking to buy at 118.75 or 76. So I literally missed the entry by 3 to 4 pips, but those 3 to 4 pips make a difference when you're trading really short term like this. Okay, even here, look, we traded out back up the median line. The market's even stalling right here. So, yeah. So that's, an example of what I'm looking at for dollar yen, or what I would look at for a scalp or something, right? Sandeep, what's going on? How you doing? He says dollar CAD seems to be at a nice support area. Yep. So dollar CAD, absolutely. So good thing that we got out of dollar CAD when we did, right? The original target was actually 26.20, and I put the target at 26 the next day just because it was one of those things where we were trading towards a parallel, and the parallel decreased every day. So I didn't want this to happen, basically, is for the market to fall short of our target and then fall apart, because the thinking at the time is that we're in a triangle and that, if you have this rally, it's going to be completely retraced, and sure enough was. And I was actually looking for a short setup, but never, really saw it, I guess, if you will. So these are, Sandeep, these are a couple of these are some of the slopes I'm following right now. And yeah, I didn't talk about dollar CAD yet. I did talk about pound CAD, which, is somewhat similar in that we're at support in pound CAD too on the near term, so that we could kind of, can you guys hear me still? Okay. We're still looking for support, pound CAD, so that we could, get a little higher for a potential larger sell. But yeah, dollar CAD, yeah, we got support. 24.15 is daily reversal support. I guess you could call this some sort of slope support here. Maybe it might be stretching it a bit. This line comes from connecting these two highs here, okay? And then you can see when we connect them across pivots, we've got some pretty nice inflection points. So I keep these on here because they might be very useful going forward. But yeah, for dollar CAD, I'm not gonna. I don't necessarily see a trade here right now. We might be getting on towards the end of the range in dollar CAD. I guess another reason why I'm, hesitant at this point with dollar CAD is the fact that the declines have been so sharp. I mean, these declines are sharper than the advances. So, it has me worrying or wondering if we're actually going to get a downside break. All right, it's just a possibility. So just to answer your question, though, Sandeep, yeah, the dollar CAD has come into support. And yeah, if you want to trade a short term, you could probably look higher off of here. I'd be looking, up to, you can see the level that's been very big, basically 25, 25, 35 or so. I mean, you've got a series of highs around there and lows and everything. So 25, 30 to 40 might be some resistance moving forward in the near term. I'll dig a little more into it as I you know, when I'm writing the report tonight, see if I can see anything that would warrant a trade there. One pair that actually is starting to come back into focus a little bit. Fernando says you didn't short dollar CAD, but you did short dollar NOK. Yes, exactly. I did short dollar NOK. Dollar NOK is a real nice setup that we had. Right? We had the best trades are always confluences. Confluences are the best. Okay. It just means that you have a super well-defined level, right? And in this case, we had three things really at on this. You know, we had the old, like I said, we had on the report, we had one of the older pitchforks, if you will, that came into play. I mean, look at this thing. This thing, the upper parallel here was support. It was resistance first, then it was support. It was support. We broke down through it. Then it was resistance. Okay, then the median line ended up being support. It was resistance. Okay, put the order to short it at the close of the reverse bar here, which is 763.40. That worked out. And then, of course, we had the upper parallel from the down sloper, right, the downtrender. And now we're targeting half at down here at 751 today. That target will be moved up a little bit tomorrow because you can see that the line increases slightly each day. Okay. Can you guys hear me? Someone's saying that the sound keeps going off in and out. Okay, sounds good. Sounds good. Okay, I'm sorry, Fita. I'm heard that I'm told that the sound's pretty good, so I'm not sure. In any case, yeah, the dollar NOK. I actually wanted to touch on this dollar NOK for a sec. So, as you know, we're short. It's important to take some off the table, you know, when you're in these range conditions, when you get to a favorable point to do so, right? And we are coming into support, so that's why we're looking to take some off at support. Now, I did tweet that we had minor support coming into, you know, just now, like an hour ago, and we did get that. We traded off this thing, but actually we got a nice low rejection here last hour, so still looking lower. I guess you call it kind of a gamble that I'm thinking this is going to break. Again, very short term. But the bigger reason why I'm not aggressive in taking the position off here, or taking some of it off right here at least, is the momentum that we're seeing in dollar NOK right now. So if I show you the dollar NOK, see here. Get the data to load. All right, there we go. Okay, so if we look at the 240 minute is kind of, I think, the sweet spot, especially for trying to catch, you know, what we're trying to catch. One, you see a few things here. You got a high, a higher high, and a lower high. It could be a head and shoulders top, for one. Okay, now it's not a head and shoulders is not a head and shoulders until it completes the head and shoulders. So it's not a head and shoulders until it drops below this low here. Okay, but want to keep some on because, you know, if it does break, it's usually difficult to get in psychologically and everything to sell a break like that. So we already have some on, great. But two, look at the RSI. Okay, so after we got oversold here, that's the first thing for a downtrend. You got to get oversold. We did get overbought, but very slightly for like one tick. And then the market, each decline has stalled slightly below 30. But each rally on the 4-hour chart has stalled at the 60 figure. Okay. that's, to me, what it does tell you, it's fact here. It tells you that the RSI profile at least is no longer bullish. Okay, it's at least sideways and maybe bearish, right? This is a darn bullish RSI profile on the 4-hour chart. It gets really freaking overbought. Market comes down, RSI bottoms near 50, RSI bottoms near 40, RSI bottoms near 40, RSI tops at the top. You're not above 70. You get oversold. Now you're like, we got something to work with on the other side. Okay, and then these RSI failures near 60 is a good sign if you're looking for this thing to continue on the downside. All right, you can do this on any time frame, right? So on the daily chart, this is actually still a bullish profile, right? But as long as we have that beautiful confluence that we've got still in place, then we're looking to the downside in dollar knock, okay? What's this? This is a pivot system I use, but you can see 739.40 as a possible support point there. So let's see where the heck that comes into play. 739.40. 739.40 would be like right. 739.40 would be right here. So I can envision us, if this thing starts to work out, we get off half here, it breaks down, we'll probably put the second target at the median line, right? The bold black line. Okay, probably be right here, because you probably get a bounce from that. So that's a rundown on the dollar knock trade that we are currently in. Now I want to go over a few more of the majors, right? The things that we might be trading here going forward. Talked about the pound. I'm not going to harp on it any longer for the time being, just because, well, to be quite honest, it's kind of annoying me, the pound dollar at the moment. So we'll forget about the pound for a second. But just know about 55.54 is the year open and 55.90 as the upper parallel, and maybe it happens Thursday, maybe it happens Friday, maybe it doesn't happen at all. I don't know. But still not forgetting about it totally. Okay, so the euro, for crying out loud, this thing has just been dead. I've got, and there's a level to watch for though tonight. If you're trading Europe, I'll be trying to get some sleep. But if you're trading Europe, watch for, you can see this area right here. I'll post this chart tonight too, but see this area right here? It's like 114.10. Okay. If you can see 114.10, it's the confluence. It's one. This is the best parallel we've got right now in the euro dollar. So you could really just kind of, maybe you could get rid of everything, and just focus on this one parallel. But you can see how these three pivots, right? 1, 2, 3, going back to late January. That's the 27th, the high on the 27th, the low on the 29th, and the high on the February 3rd. It talked about the median line, how beautiful that was, okay, and the support we got amid all the Greek saga in the news, right? We had a very good deal of support from the median line again. We had great resistance up here, literally to the tick, okay? Finally, I'm using the 2.9 low, the 2.19 high, and the 2.20 low as the three pivots for a potential upward sloping construct. And you can see that the median line has a lot of trading around that median line, or the price has a lot of trading around that median line. And even yesterday's spike lower, this was during the initial Humphrey Hawkins testimony right here. That spike actually did end up finding more or less support at the lower parallel. So as I just said a minute ago here, a couple minutes ago, confluences are always the best place to trade. Okay, and we're going to have one tonight during European trading around 2, 3 in the morning in New York at about 114.10. Okay, so you might want to keep that on your radar. All right, or just follow both of these constructs on your chart, because you might end up finding support down here again or resistance up here. Okay, so the range is tightening. It's very tight. We don't know which way it's going to break. All we can do is follow the support resistance, and if the market starts acting a certain way, like finding supports, finding resistances more than the other, then we'll look to go with it. But at this point, it's still a range. You still got support, you still got resistance, and they're converging, so it's getting even tighter. Looking at the Aussie is another one that's interesting. So this, again, this is one that we've been following as far as the black lines. And I'd expect some resistance up here around 79.20. That's tonight during Asia at around 79.20 for a short-term play on the downside. Could get you first support. I'd be watching this line here. That's former resistance. Okay, it does intersect with this median line here. Okay, really not till tomorrow night. So, hopefully things don't stay that quiet where we only move from 79.20 to 78.65 in a day's time, but you never know. But bottom line, you've got I think 79.20 is resistance tonight. As long as you can get a response up there at that place, you might be able to get short. If we do start trading weak up here, putting in some hourly reversal bars, I might actually put out a short position in the swing trades. And the bigger area I would be looking to target would actually be the lower parallel from this blue construct, this bullish construct, which would be an intersection we have on Friday with the median line itself, okay, and the lower parallel, which is really near 78.05. And that's interesting to note because if you draw the fib, let's say we draw the fib from the low down here, okay, this was yesterday's low, 5 in the morning. Let's say that we do top up near 78.20. I don't know if we will. Let's just say we do, argument's sake, right? The 61.8 of this thing comes in at 78.08. So you'd be right in the right spot for the confluence of support, right? This is looking ahead. There's a lot of stuff I do. There's a lot of imagining, and that's fine and all. You got to work with the facts, but the facts are that we've got a confluence here. So I'm looking for resistance, and if the market were to find resistance, and if it were to start breaking down, we might very well have very good support near 78 on Friday. Okay, so Aussie's been kind of crappy lately to trade, but that might change as some of these levels come back into play. Okay, if we start responding to them, I should say. Okay, I don't know if we will. The market could just end up blowing right through it. So watch those two levels. Okay, dollar yen. Eileen asking, what are your entry triggers? Well, typically I just want to know if where the levels are, right? So, in all honesty, I don't have an entry trigger. It's really about the price level. Okay, so I wouldn't put in an order tonight. I'm not going to tell you to put in an order to short at 79.20 because it's not. We're still in a we're in a short-term uptrend. Okay, but I would, if the market on Friday is trading down here, okay, Friday morning, I would potentially tell you to buy at 78.05 or 78.10 because that would be two uptrend supports. at its very core, you want to buy support in an uptrend, okay, and sell resistance in a downtrend. That's really what slope analysis is all about. And we have much longer term uptrend or downtrend resistance higher, like 79.60. But when you start working with the longer term stuff, there's a lot more room for error. So on my own, if I'm looking at shorting tonight, and I'm at my screen, I'd want to see the market come up here, maybe watch a 15-minute chart, a 5-minute chart, see if it starts putting in some higher wicks. Eileen say you wouldn't. Yeah, I know. I do want to catch the counter trend short on Aussie dollar. I absolutely do. Right? I'm just saying I wouldn't put an order in to sit there, because trading counter trend has much more. You need more confirmation, in my view, from price itself. Okay, you need to start seeing the market put in some wicks up here. Okay, so I might be looking for resistance up here at 79.20. That doesn't mean I'm just putting an order there. Where I would just put an order in is when I judge that the trend is, say, up and then there's support, then I'm looking to buy, and that's where I'll put an entry order in, right? So like dollar knock, we put an entry order in to buy, or sorry, to short at 63.40, because it was we thought we had enough information to say that the trend was already down at that point. So we were just trying to sell into resistance, right? With Kiwi last night, I thought the trend was down, so we were looking to sell resistance. Obviously, it wasn't, because it blew right through the stop. But Kiwi, Mark's asking, what is your view on Kiwi? Not really sure, to be honest. I don't have much of a view on Kiwi right now. I guess look at 76.20 or 76.10, 76.20 as resistance. I really don't have much of a view on Kiwi at this point. We had Aussie, or sorry, Eileen says, what's your clue then to enter the Aussie short? Yeah, so that's it. Just, you want to see the market start to turn over. So we go to a 5 or 15-minute chart. Like here's a good example, I guess. Okay, if you start to see stuff like this, right? You see those wicks. 15-minute is a 15-minute chart. You see those wicks. That's what you want to see. Stuff like that. That's actually a really good example. So, the wicks itself is not the, what you look for to go short. It has to be the wicks that happen at resistance. Okay, people love pointing out candlestick patterns all the time, but a lot of times they're pointing them out like in the middle of nowhere, right? A candlestick pattern is very useful, extremely useful, when it's happening at resistance or at support, right? And since we're laying out 79.20 as resistance, and for good reason, we've got that confluence up here. If you're zoomed in on the 15-minute, 5-minute chart tonight, and that's another thing too, Eileen, is the time, right? You want the time to be right. So we all know that the best time, for Aussie highs is typically, around 7 to 9 o'clock p.m. New York time, right? That's really when there are opening ranges for Asian markets. So if it's happening at 1 in the morning, it's a different story. It's not, probably not a good time. Okay, yeah, Eileen, absolutely, sure, good thing. Let's check out Mark. I hope I answered your question. I just don't have right now with Kiwi. I just don't have great grasp on it. I mean, I thought that we had a really good looking, 76.16 still possible short side. Okay, we're still into resistance, but like, what are you gonna do? Just be short? This guy was asking me today, actually, a colleague here was, what are you doing? What are you in right now? I said, I'm short dollar knock right now. That's it. I was like, I want to be in a lot of things. I want to be short Kiwi. I want to be short pound. I want to be maybe even long euro for a little bit. I just don't have the setup right now, right? Like, I think Kiwi's going lower, but that's not good enough for a trade itself. The market responded really, really well to what I thought was going to be a really important resistance line. It still could end up being one, but today's rally definitely caught me off guard. Did not see today's move coming. Maybe an Aussie, but I did not see Kiwi ripping this high at all. Okay, so yeah, I would watch, for resistance basically right above here up to 76.16. But after that, if it gets above there, then things really start to get a little more difficult. And you have to maybe just kind of let this thing do what it wants to do for a while. Maybe establish support or something. Look, especially Kiwi, man. After this thing yesterday, after it broke this line, I was like, we're home free. But whatever. Brian asking, do you consider the 10-year bond or TLT? Yeah, so 10 years called a note, 10-year treasury note. The 30 years the bond. I look at the 30-year the most. It's the most removed from the Fed, so it's the most pure market there is. Okay, the further you go out in duration, the more market, forces are at play, right? The shorter term, if you're looking at Fed funds, it's nothing, right? It doesn't move. If you're looking at 2 years, 5 years, the closer you are to zero to now, the more influence that the Fed has rather than just the market conditions or the general market itself. So that makes it difficult to analyze. You can't really look at, as a trader, you want price movement, and the 30 year is always going to be the most volatile because of that. It says, besides metals and oil, which commodity would you say moves the most or could be used to tell? Well, it used to be copper, but that relationship has died down recently, over the last 7 years or so. Those are the big ones to look at: gold and crude oil, especially now, obviously crude oil, because with the how crowded that trade was and how big it got washed out. We all know that you follow crude oil and you can see that it's moving simultaneously basically with the euro and dollar and everything. So right now it's crude. Other than that, I'll follow, let's see here. Futures that I follow at this time: gold, well, crude, silver, gold, copper. Those are the metals. The S&P, the Nikkei, and natural gas. That's it. Okay. Natural gas just follow because it's an interesting market right now. It's just a lot of news surrounding it. It's been beaten up forever, so I think it's interesting to follow. Yeah, I mean, the 10 years is more trade. Yes, a lot of people like to look at the spreads and everything. Where did we get today? What was the high today in the S&P? We got up to 21.17 and 3/4. Now look at that. The bond is actually ripping higher. We started, the bond was like at 146.5. The bond's been rallying, and the S&P has been rallying. Yeah, it's just a crazy market right now. I'll look back on this time and be like, what the hell were people thinking? Oh well. All right, so I want to finish it up here real quick. You know, dollar yen still following this short-term structure. Might help us enter a short at some point. Might help us enter a short at some point with you know, again, 119.20 to 119.40, still holding out for 119.40. Went over this in the very beginning of the webinar. Dollar knock, continue to focus on the support that I think exists down here. Okay, we'll have updates on that tonight. Other than that, kind of slim pickings right now, right? I'd watch Aussie tonight up around 79.20, and Euro tonight or tomorrow, whenever, but preferably tonight at 14.11, 14.10 up here. Okay, if you start getting above there, things start to get a little more bullish. In fact, this actually might be the thing. This might be the slope to look to trade on the bull side. To be honest, right? Maybe this sliding parallel right here. You can see that this whole area. I mean, this whole freaking area right here, right? In this case, the market is range, okay? Again, a lot of people look at horizontal support resistance, so you wouldn't see people necessarily wanting to trade Euro on the long side until it got above 114.50. Well, for us, because we're looking at slope analysis, we should get a head start. So if the market were able to push through 114.10 tonight and start establishing support on what's old resistance, with old resistance being this line, okay? You can see this line, this parallel here too. This was support, this was resistance. If you can get back above here and then start bouncing along and establishing support, that might give us the opportunity to trade on the long side for euro dollar. FIDA asking, how do you qualify an official trade? What are the few essentials you consider before placing official trades? So a lot of it's just a feel, to be honest. You know, I do like to have the market. Again, the confluences are the best thing. You know, the best trades are confluences. I'll say it time and again. But I like to, you know, put orders at confluences. That's one. Another one is finding short-term trend from long-term price levels. So what I mean by that is Kiwi is a good example, just didn't work out. But I thought we had identified good resistance in the New Zealand dollar a few days ago with the former support line that sloped down, right, after the breakdown, and Kiwi came off very sharply, but then, you know, and made a downward sloping pitchfork, okay? So we had short-term negative slope to trade in Kiwi coming from long-term resistance. So it's your classic, you know, trade with the larger trend, blah, 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 right? That's what we were looking to do, is to trade into short-term resistance and a longer-term downtrend. So there's a couple combinations there. Again, one being confluence, one being longer term levels and shorter term, or longer term direction, shorter term levels. You know, reward to risk always plays a factor, obviously, but that alone is not a consideration by itself, because you can have the best reward to risk all day long, but if you lose 90% of your trades, it doesn't matter. You know, my trades are typically going to be probably, I'd like to hit 40% of them. It's probably not going to happen. But if you keep the reward to risk at 3 or 4 to 1 on the trades you do make, then you'll be more than fine at the end of the day. And that's really it, you know. All right. All right. Good stuff. All right, Brian, man. All right, take care, guys. Thanks again for attending, and I'll have the archive up as soon as it is rendered. All right? Okay, great. Thank you again. Good luck the rest of the week. I'll have the swing update out later. All right.